GetCrack. Wake up, motherfucker.
Gold beating earnings expectations and reporting record gold production with an increase of 7% of the production year over year. Joining us now to talk mining operations, the price of gold, and much more, John McCluskey, President and CEO of Alamos Gold. It's good to see you, John. Are you more interested in explaining why gold has been hitting new highs? You want to be a macroeconomist and I don't know, a Fed watcher, a monetarist? I don't know what we can use. We can do that. Or do you want to talk about the best way to run a gold company and how that's done? What do you want to talk about first?
Those are two of my favorite subjects, but I'll tell you, I'm with everybody else. I'm certainly observing what's going on, but trying to guess what's going to happen next is that's a serious challenge.
Yeah, well, I know that it can be over historically. You can have a ratio to barrels of oil or to a decent suit on what an ounce of gold goes for. But certainly 37 trillion in total debt and things like QE and rate cuts and all the things that we see, gold is scarce. And even though you were able to raise production by 7%, it's really hard to produce gold, isn't it?
That's
almost
observing what's going on, but trying to guess what's going to happen next is that's a serious challenge.
Yeah, well, I know that it can be over historically. You can have a ratio to barrels of oil or to a decent suit on what an ounce of gold goes for. But certainly 37 trillion in total debt and things like QE and rate cuts and all the things that we see, gold is scarce. And even though you were able to raise production by 7%, it's really hard to produce gold, isn't it?
That's a very true statement. I mean, we're probably one of the few companies that's been bucking the trend. And it's probably one of the advantages of being a smaller company as opposed to one of the big giants where they're producing 4 to 5 million ounces of gold a year. And that's a very difficult job to replace that just to sustain where you are. In our case, we've been rapidly growing our reserves for years now. Put it in perspective, 10 years ago, we had a single mine and less than 2 million ounces of reserves. Today, we're operating from 4 gold mines, and we have 14 million ounces of reserves just reported yesterday. I mean, that's an extraordinary sort of contrarian sort of position to be in relative to the rest of the sector. And it's because, from a very early day, we took a contrarian view in terms of starting this company and the way we run it. So, I would say that on that subject of what's the best way to run a gold mining company, you've got to act like a contrarian. Investors don't typically like it. In theory, they do, but in practice, they don't. But we would never have been able to build the company to where it is today over the last 22 years if we weren't taking this contrarian approach.
So do you have people out scouring for properties or do you just do M&A? Do you just look around and try to figure out what makes most sense? What's a competitor that's at a price we can afford, and then you got to look at balance sheet concerns, obviously, and everything else. But that's what I figure you need to focus on. Is if you're going to grow, it's got to be through acquisitions, doesn't it?
Well, that's how we started. I mean, think back to 2001 when the gold price was under $300 an ounce. Of course, today it's nearly 3,000. But in 2001, when nobody thought gold was ever going to see the light of day again, we stepped in and bought an asset off of one of the major mining companies. It was an option agreement, essentially, that it required a $500,000 down payment. $10 million to acquire a project that where the major had delineated about 2 million ounces of gold, but couldn't see a way for any of that production to be profitable. So they sold it to us for about $10 million after pouring roughly $50 million into defining it. And we took it on with, and the day we signed that deal in November 2001, there wasn't a single ounce on that property that you could produce profitably. But over time, we've generated over 700 million in free cash flow from that project, and produced over 3 million ounces of gold, and it's still going. It's been operating for the last 20 years. So it's been
John,
tremendous.
It's amazing. Before we go, I just want to get your comments on Fort Knox, and I mean, I think it goes all the way back to James Bond and Goldfinger, and it has not. People haven't looked to see what's there since I graduated from high school. So 1974. Do you think we know what's there? Do you think that the number that we're given for how many tons are there? Do you have any feel for that? I mean, I've seen lots of movies where people go in and they've already got the gold. Thieves have already taken it. There might be nothing there, according to some fictional movies.
Well, I'll tell you, be a lot more confident in what they're saying if they audited it. You know, I'm on the World Gold Council board, and we audit the World Gold Council gold holdings every quarter. You know, we never stop the audit process there.
What a concept, yeah.
So, you know, why haven't they audited their gold reserves for such a long time? I don't know why they wouldn't do that, but you know, I think if this administration presses for an audit, that'll be a good thing for everybody. I think it
Right.
will bolster confidence. But until they do so, who knows?
Right. All right. It's good. It's a fascinating subject, and it is. It's the most valuable of all the pet rocks, I think. I know there's some other ones, I guess, platinum, things like that. But it's always good to talk about it. Yeah, $3,000, $300. I didn't realize in 2001 that.
In the last year, it's up almost $1,000 an ounce.
Wow.
So I mean, gold
crazy.
has been really on a tear for sure.
Right.
Alrighty. Oh man, gold. Hold on. So, if you got them gold miners, they should be doing pretty good today. And I don't know what's going to happen after the market close. After market close, there'll be Newmont Mining, probably the largest gold miner out there, will report earnings. And usually the big miners don't do well. Okay, so if they do okay, like Barrick Gold reported like last week, then should be fine. And the gold miners will keep going up. Now you're going to have to look at silver, though. Silver is around $34 an ounce, 33. Should try to get over 35. And if we can hit 40, then yeah, gold still has a bit to move before pulling back. So keep watching it. So there's a lot of stuff happening today. Let me see. And let me see what's going on. All right. So HB's wanted to know about TEM. Isn't that Tempest? Tempest AI. Isn't that Nancy Pelosi's little stock here? And I talked about this one once before. And the thing about it is, let's see, January 21st. So Nancy bought it around here. And this is January 14th. Yeah. And this was around when I told everyone to go long everything, like January 13th. I told everyone, that's it. This is the turn right here. This will be the turn. And ever since then, we've been moving up, right? So several days later, Nancy doesn't need to report anything. You know, she doesn't need to report anything for 45 days. She could have waited 45 days before filing it out. But I think it was because she had some trades made in December. So those were about to hit the deadline. So she just reported it anyway. So people who listened to that report were about 4 or 5 days late because it got disclosed on Friday, probably after the close. And then people on Monday started rushing in here, right here. See, yeah, it was 3-day weekend. Okay, probably Tuesday, January 21st. You see, and they all jumped in here, and it's just been moving ever since. So it's kind of like a self-fulfilling prophecy. at this point, because so many people follow Nancy Pelosi trades compared to anybody else in Congress, like whatever she picks will go up after she reports it. So this is why you shouldn't allow this to happen. So if people know what a big guy bought right away, they'll just keep chasing it all the time. Normally, you're supposed to wait 3 months, a quarter, before you report again with a 13F filing. But here, with the rules that's set for Congress now and Congress family members or whatever, yeah, this is gonna start happening. So great for behavior. You know, like honestly, I'm sure she probably's gone by now. Maybe she already sold because earnings is on Monday afternoon. So if you're gonna trade this, yeah, you better be ready to get the hell out because I don't know what that earnings is gonna do here. Okay, some other things. Palantir. So now there was interesting stuff yesterday. Okay, so this is why I've been telling people day trade only, not swing trade. If you're gonna swing trade, then it's not really a swing trade. It's gonna be like maybe 2 days, 3 days worth of trading. But in essence, like you better be ready to get out of here because right here on this time mark, I think what happened was the first thing that happened was a release of minutes. Okay, they had minutes on her orders and options call. See, exactly, way too late. So see, Trope said it's an options call. So if you do options, you know, like by 3 days later, that options pricing is completely way different. Especially when everybody already knows that she's in it. Everybody's gonna the demand for options is gonna go skyrocketing high, and it's probably already went up 10,000% from where she bought it. So it's like, dude, you guys are dumb. So unless you get real-time access to data, front run every moron out there, this is why it's gonna be tough. The game is tough. You have no edge against that. All right. So anyway, that's Temu. Yeah, RX is okay too. Yeah, it's still in play. So all that stuff. But anyway, let's go to Palantir. Now, I bring this up because this is exactly what I was afraid of. Like this kind of, and I said when it did its earnings, I sold a fat chunk right after earnings. And then I said, February, I am going to sell the rest and the last part of my Palantir. And that's it. I already was selling all the way into this before this happened. And we're almost done with February. And I'm probably never coming back into Palantir again. I think I'm done with it. Same with Axon, right? Those 2 stocks I was mentioning last time. You have and this one started dropping in the morning yesterday. And it was like a downgrade from some analyst who said that he was downgrading, and it just started going down like crazy. And then when this thing happened here, so what's going on? Why did at the end of yesterday everything started going down for certain stocks? If you looked at the NASDAQ or S&P 500, you wouldn't have seen anything. Nothing would have changed on your screens. But if you were looking at individual stocks underneath it, and you saw something like this going on, then that's what I was wondering. Right now, it's easy to get liquidity pumping in, right? Look at SMCI. SMCI, I traded today. Down, up 20% if you use the SMCX ETF. Yesterday was up 30%. So if you did 2 day trades, yesterday and today with SMCI, it was 30 and 20%. Let's look at HIMS. HIMS yesterday had some news. This wasn't really news. It was just a press release. HIMS just said, oh, we're going to start giving out free tests or something. I don't know, something like that. I didn't care. But all of a sudden, pre-market, it started shooting. And then when market opened, it just went all the way up. So within 1 hour, it moved 16%. So liquidity is coming in. People are buying calls. There's a lot of options going on here because people are playing with options. And so it's easy to give and it's easy to take. All right. So when you look at stuff like this, anybody can piss in the pool and everybody's going to jump out. The news took advantage of yesterday. So first thing that came out was the usual FOMC meetings minutes right here. So this was around 11, okay, my time. So that's 2 p.m. Eastern. right around here. So first that came out. Right when it came out, the algos came in. The algorithms started coming in and start slamming stuff down. Powell, if he wants to, the meeting minutes from the previous month's meeting. So we had January meeting, right? And then about a month later, they can release minutes. And the minutes are generally nothing, boring stuff that they go into details of like who said what during the meeting and this and that. If Powell wants to, if he doesn't like the way how the market reacted to what he said during that meeting, he can adjust what he says during the meeting minutes. So he was a lot tougher in his stance in the meeting minutes. He said, don't expect any rate cuts this year. Don't be thinking I'm going to go soft on inflation. Don't think I'm not paying attention to what Trump's doing. That's essentially the message. Okay. So this is a repeat of what happened in December. So enjoy what you get, but you better know when to buy and when to sell. So in December here, as you can see, like, what was that? This was like actually the Monday of that meeting in Palantir. So that was already what you should have knew something was up. So that Palantir is not a good example, I guess, of that. So Bitcoin probably is better, or MSTR. MSTR might be better. Yeah, during that week, right? That same week. So you got here like that same Thursday, the week before, and then you had the week of, and then you started going down. Yep, like crazy. That's it. So where are we at in MSTR with the Michael Saylor's talking today in Miami? So I'm still considering what to do with this one because Bitcoin actually hasn't been doing anything badly. It's right back up at 99, and it did what I thought it would do the last time I was talking, I think. So on Tuesday, I expected something like this. I said, expect something to drop towards the 90s, and I was expecting a deeper one, though, like this one, more similar to this one, maybe even more severe, but okay, this will do. So you had a little dip, and you reversed, and this was overnight. Pretty much just as market was closing, and then just as it closed, it went back up. It zoomed right back up overnight, and then we've been doing this for the past 2 days. Good. That's exactly what I think would happen. So you have this creek, you have another mini creek, and then now you're getting more volume coming in as we're getting close to 99,000. So liquidity is still there. But remember, anybody can take it away right in a few seconds, a snap of a finger. So that's why I keep saying day trade only, day trade only. Right now, you're just like picking, they call this like picking up pennies from the floor while the steamroller is coming, right? So some guy got a steamroller with the asphalt making the road flat, and that somebody dropped a whole bunch of pennies in front of you. So you and the steamroller is coming. The steamroller is coming at, you're picking it every penny you can. So every little day trade is just a penny. All right. Think of it that way. So do not be greedy. Get your money, get out. Just take your profit and get out, whatever you can. Don't stay too long. Set your stops tight, trailing stops, anything you're doing right now, set them tight. So if you are not paying attention to the market, you just, okay, you set a trade and then put a stop in there, put it tight. Just like, don't even bother. You know what I mean? It's really hard right now, I think. So don't, and you're going to have to wait until NVIDIA comes out next week on Wednesday. NVIDIA's earnings is next Wednesday. If that one does well, then we can go into March for another week or two doing this game. And then sometime during March, somebody will definitely say something bad and it'll crash everything. But for now, we have liquidity. We have enough to go higher, a lot higher. And I'm going to play Martin Scully's little rant pretty soon. But first, let's look at Walmart, because I think that's why a lot of large caps took a ding today. But it didn't care about what Powell said yesterday. But it cared about what Walmart did today, I guess. So, okay, let's see.
Just reported quarterly results, and Courtney Reagan joins us now with the numbers. Courtney.
Yeah, Andrew. So Walmart reporting adjusted earnings of 66 cents. That's 2 cents above expectations. Revenues of $180.554 billion, also above expectations for just a little over $180 billion. Issuing full year guidance for 3 to 4% revenue growth. Consensus, though, is for 4% growth, and adjusted earnings, Walmart is saying, between $2.50 and $2.60. Analysts, though, are looking for $2.76. Walmart also is raising its dividend 13%. Here we do see the stock is reacting down about 8%. Now, the retailer posting U.S. comparable sales of 4.6%.
What was that noise? Oh my God. Wow. Anyway, so I'm gonna answer some of Trope's questions since I'm paying attention to the chat again. So let's see what SMCI is doing now, and then oh, and by the way, so this is what I did yesterday, and then you can kind of see, and this was 28%, and I did the same thing with the 20% move today. I didn't do all the move, but yeah, you just gotta get in and out. You just gotta get in and out. You can't trust nothing, man. Nothing I trust. And it's really beneficial if you know options at this point, I think, because if you want to do a trade across 2 days, then you can hedge up and protect, or like you can have a combination of shares and options, so you can take advantage of both pre-market, like, because like options don't trade beyond like 30 minutes before open and 30 minutes after close for some brokers and something like that. I don't know, man. There's always these rules and things, very annoying. So that's why options are kind of like that too. But let's see. I think for SMCI, it's from what I saw yesterday, because if you guys remember what I said 66, 67 is the limit. And this is with the DeMark indicators, okay? So that's the advanced indicators I'm trying to learn right now. So it's kind of like HIMS with 45. I said HIMS should only go up to 45. So at that time, so if I'm going to go to HIMS, like you see this range, right? So Wednesday, February 5th, I said, I'm getting out, or I think this is the top. But then what happened was, okay, it looked like it was going to be the top because, okay, we had the first red bar, hourly red bar that was significant, down 6% on that Thursday, February 6th. But then the next day, Friday, first hour, pretty much a 12% gain. And that was when I said, uh-oh. If this thing doesn't respect those DeMark indicators like that, then that means this thing can go to all new highs. Because the problem with this stock is there's no history now. It has no history since $30, pretty much. Okay, this was the last high, 35, back in December. So all I expected was 45. That was conservative. Now, if you looked here, you saw what happened because it was building a range. So if I know 45 is the area where it wants to hang out in, you can see like it spends most of its time above this range that I've drew between $45 and this low, the last low of 40, right? So it was staying high above at 42. So the upper half of it, it was like hanging out. And then Wednesday, it started moving up. So if you go back to my videos, I started talking about HIMS again. I didn't think I was going to talk about HIMS, but then what happened was I just started seeing this, and I didn't say buy, but I kept mentioning it for some reason, right? I talked about the Super Bowl ad. I said like, hey, pay attention. So I was giving subtle hints. I don't want to like get people just to run in and buy this thing because you're taking a chance here that this thing doesn't just reverse down and collapse the next day. So when you see an intraday move like this, where it just keeps moving up for the whole day, and then you end up at the top of that range, somebody knew the next day it was going to zoom up like 20 something percent. All right. Whoever, however, that's it. So that's all you got to wonder. All right. And then this is what's happening here with HIMS. And the same thing can be said of SMCI. So I mentioned that because you see this is also a range. So I got out right on Friday, the 7th, Friday on the 7th, February 7th. And then the next day on Monday, it was still moving up to the last limit, about 42. 42 is where I expected it to be, but I was already gone. I didn't expect to jump back in. But I knew the final limit would be like 47, right? So what happened was they had earnings. It jumped up again because the day before earnings on Tuesday, it went down. So people were selling off before earnings. They didn't want to stay there. Earnings comes out, and then the next day, okay, it has a gap up, comes down. Okay, I see it. So I decided, I'll give it a chance. I'll enter in at 39. And the first thing it did the next day on Thursday was it went all the way down to the lower bound here, where we had this gap here at $37. So I got stopped out immediately in the morning. But I jumped back in because when it reversed really quickly right to 39, I said, uh-oh. A lot of shorts probably piled in there thinking it was a great time to short. They're getting squeezed out. There's enough juice to go higher. I came in, it just went higher. I sold, okay, at 42, kept a little bit later. So then on Friday, it went a little bit higher. I sold again. So I was out again. And what happened was on Tuesday, so because 3-day weekend, I'm not going to stick around. 3-day weekend, I don't know what's going on. I'm going to get out. It gaps up on Tuesday. And I said, uh-oh, it's going to 67 then. So on Tuesday, what I said, like either it's going to 67 right away and then come back to 42, or it's just going to fail here and go to 42. Something like that. So now that it did this, tropes, I'm going to say, like, you are better be careful, because either this thing is just going to go sideways here before moving up again and attacking 67, or it's just going to keep going sideways before failing and then dropping back to 42. Those are your two choices right now. Those are your two choices. And that's why I said day trade only. Only use this for day trading right now. If you wanted swing trading, it was the time when I said buy here when it was 26. Because you had this whole way up to 49 or 47. You had this whole way to go up. Now you're just like, yeah, you can hope that it breaks 67 and then shoots to 90, because after 67, it's going to 90. Is there enough liquidity to make that happen? Are there enough shorts to come in right now? Because if there was enough people shorting it, trying to, like Martin Shkreli, he's got tons of money, right? He's trying to short right now. He shorted yesterday right here in this red bar. He went in to short this guy. If more people are thinking like him and keep shorting as this thing bounces back and forth, there's enough energy for it to just keep going higher on NVIDIA earnings on Wednesday. So this thing is really dependent on what NVIDIA says next Wednesday. So you can think of SMCI as a leveraged play on what NVIDIA says next week. And that's what the people are probably doing right now. Instead of playing NVIDIA options, they rather like gamble on SMCI options, because this thing, this thing is tapped out. This thing hasn't done anything for a long time. People are just like scalping left and right, back and forth. Doesn't matter. SMCI is way more fun, because the SMCI can crash all the way back down to 20 or zoom all the way up to 90. If you make the right bet with an option, whoo, man, you can turn $1,000 into $100,000, right? Or more. So that's what people are like that. People are like that. They want to gamble. $1,000 to make $100,000. I'm sure that's very tempting to a lot of people to put down $1,000. I don't know if it costs that much to buy the option nowadays, because SMCI now is way too expensive now probably. But if you bought that SMCI option to go long, like when I said to go long, then that was probably what was in someone's mind. They were thinking like, if I want to play NVIDIA, I'd rather use SMCI. But that's the thing. And now that I want to short SMCI, it's kind of like, well, maybe I'll wait for SMCI to go up a little bit more, get up to 70 something, and then short there, and then use that to basically make my money on NVIDIA saying bad stuff next week. Could be how they're planning it. So a lot of this stuff, a lot of these moves, it's all because of options at this point. Oh man, so tough, very tough. So yeah, and the thing is, like you say, like it goes to the average, stops, the shakes. Yeah, it can do that. But that's really also dependent on where the options are at. The levels. Like we don't see it here, but if you buy that book map and stuff, you'll see like the options where they put the orders in, and then for for where the actual gamma levels and things like that. I'll play some Samantha LeDuc stuff later, but I'm not an expert on that stuff. If you were, you could see, like, because for me, I just look at the chart, right? And the chart kind of explains where things are going with resistance and support levels. But what that reflects is largely options in this name of the game, because people are likely to, like, let me show you this. Like, if you see here, like this area here, so this is the first time SMCI around January 2024 last year, right? This is pretty much last year. So between 35 and 41, you had people trading in one day only. So nobody was trading between 35 and 41 anywhere else until it crashed back down here in September 2024. So this area between 41 and 35 becomes like a little, like a vacuum, okay? So that's why you see this gap. Like, look at it, like between October 29 to October 30th last year, it just gaps down. So it gaps right to 35. So there's nobody trading in that area, right? Because it only had 1 day of worth of trading. So very few people bought and sold shares in this gap between 41 and 35. And then what happens is, like, you see a lot of people doing options, then they'll have to put like strike prices, right? So they'll probably avoid that area. Like, they won't set their strike prices in that zone. They'll try to do it above or below it. So you see a lot of action that avoids, it tries to skip over that. So every time it gets up there, just quickly tries to jump over, like here back in December. And then when it came back down, it just quickly went down, and then it's got stuck below it. Then it just stayed below it. And then again, when we went here, this is where I sold on Friday. This is one of the reasons I sold that Friday, not only because it was a weekend on February 7th that day, it's because I didn't want to get caught in a gap. I didn't know if it was just going to gap back down and go straight down or what. I don't care. I said, like, that's good enough for me. And what happened? It just gaps over and tries to get up above it, right? So now it went back to 41. So it's a magnet, that 41 level, 42 level. It's just like, it just wants to fight through it. And then once it broke, you see, now we go back up. So we go back up to the next pool of liquidity. So that 41 level, very important. It will come back down there eventually. So I don't know if it will to the next week, or it will just break and continue to 90, and then we go back down. But this area between 60-ish, 66, I think 66, 67, yeah, it's pretty important. Pretty important now if you want to go higher. Okay, that's it. That's enough of an explanation there. So let's get back to the Walmart stuff here.
$180.554 billion, also above expectations for just a little over $180 billion. Issuing full year guidance for 3 to 4% revenue growth. Consensus, though, is for 4% growth, and adjusted earnings, Walmart is saying, between $2.50 and $2.60. Analysts, though, are looking for $2.76. Walmart also is raising its dividend 13%. Here we do see the stock is reacting down about 8%. Now, the retailer posting U.S. comparable sales of 4.6%. That's 42 straight quarters of growth by my count. Transactions up 2.8%. The release calls out broad-based sales momentum across categories with seasonal sales, consumers using expedited delivery options, and share gains primarily from upper-income households. Now, Walmart's U.S. digital sales coming in up 20%. That's just a slight deceleration from the previous 3 quarters. Ad sales growing 29% globally, 24% in the U.S. I spoke with CFO John David Rainey briefly, who said, if I had to sum up how I feel about the consumer in a word, I would say steady. Rainey said that according to its surveys, Walmart is attracting these higher income consumers because of its delivery convenience, noting we now serve 93% of America same day. There are very few companies that can do that, and particularly in the fresh category. He said right now there's nothing assumed in the guidance related to tariffs. Remember, 2/3 of what Walmart sells in the United States is made, grown, or assembled here because they skew so largely towards grocery. But Rainey said, quote, we're not going to be completely immune to this. We will be impacted. We were impacted 8 years ago, but we're going to work hard to keep prices low for customers. And while the majority of Walmart sales are grocery, as I noted, Rainey said that general merchandise sales did grow for the second straight quarter. They began to see that inflection 3 quarters ago, but really growth the last.
Coming back already. It was down almost $9. It's now down.
Oh, yeah. Look, now it's
$5.
down about 5%.
And the Dow it was down 150. It was only down 100 earlier. Can you give me what's my takeaway?
I think the takeaway is that Walmart does seem to be serving a wider swath of consumers in the United States. We often think of it as a low-income consumer, but it just keeps grabbing more of these high-income consumers. And I think they're operating really well, frankly. Obviously, they're very big. They have a lot of advantages because of their scale to offer low prices, especially at a time when consumers are feeling stretched, no matter where you are in the income scheme. And I think they've made a lot of strides digitally.
I just remember, Courtney, in recent quarters, Walmart has sort of diverged from Target.
Yeah, you're right.
And others, and popped, had great days after the company. I don't remember down $7 days with Walmart.
Right.
And what's different? I don't understand.
That is true. I mean, I think the guidance potentially is a little bit disappointing. 3 to 4 instead of 4,
and then not related to tariffs either.
They're not counting into tariffs. When I spoke to John David Rainey, he said, look, they had that Vizio transaction, so they purchased Vizio. So there's going to be some noise with that. There's some leap day. When you look at the operating numbers, that's actually higher. The operating revenue itself is actually going to be sort of higher in an acceleration format than what they've seen the last couple of years. So he was really quite positive about this. I think, maybe we'll get a little bit more information on the call with some of the details about sort of the operations of the company and how that's generating the revenue.
Is there anything that could cause Walmart to not be, as great as people were hoping from the consumer, or is it from competition from Amazon and others?
I mean,
can we glean anything about the overall economy from the stock being
right?
$8?
I think it's tricky. I don't think that the stock price is really reflective of the consumer and the economy. He has said consistently, and he's used the word steady and consistent for the consumer. And he's talking across incomes. And they survey their customers. So I don't think this is just sort of he's sticking his finger in the wind and saying, this is how I feel about it. This is what his consumers are telling him, whether it's a higher income consumer that's moving more towards Walmart because they can get their groceries delivered same day, which is hard to do for a lot of retailers, to his point, right? That's not something that everyone can do. But general merchandise is also growing. Right. And because they offer this big marketplace online, millions and millions of products beyond what they offer in a store, that can be attractive to a wider swath of consumers too.
I was counting on Walmart to help the Dow today.
Maybe it will.
So interesting
it's pre-market. It's pre-market, right?
No, I know, but what's so
interesting
to me is that we just had Roger Ferguson on. I mean, with the conference board, with more confidence. I mean, what's so fascinating right now is we're getting earnings like this at a time when CEOs are saying that they are super confident about what's happening in the economy. And I'm trying desperately to square this circle because the truth is we've had some earnings reports that have been coming lighter than people had anticipated. Yep. There's been all these questions about tariffs and what that uncertainty is going to mean. We still have the tax issue on the table this year. And so there's sort of this strange sort of disconnect, and how much of the sort of regulatory unbundling that's going to take place in this country is going to ultimately boost business that we'll actually see in the numbers.
Yeah,
I mean, obviously it's too early for that. But.
Yeah, exactly. And look, I think the month of January is a little tricky too. I know it's funny to blame weather, but it's freezing outside. Nobody wants to go outside. People aren't going out. They're not buying as much. Weather, I think, also does impact things. They talked about a little bit of a blip from the California wildfires. I mean, certainly don't mean to be glib about that, but obviously people are not shopping when there's real danger to their lives. And I just want to sort of clarify exactly what John David said to me. He said, look, we're actually seeing an acceleration with a guide of 5 to 7% for the core business when you're talking about revenue. The guide there is for 4% because of this other noise. So I don't know if that helps clarify things, and maybe he'll have to go through that a little further on the call.
All right, let's see. So Palantir, let's go back here again. And so during that time when Jerome Powell was like, well, he wasn't talking, but I'm saying it got released right at that moment. And then a whole bunch of things got piled onto it. I was like, okay, we have a SEC filing that shows Alex Karp is planning to sell some number of shares of Palantir this year into September. So updated sales plan for his shares. So he's planning to sell a lot more. Okay, that's one. And then there was something else there was a memo released about the DOD. Okay, something about like, oh, they were going to slash a whole bunch of of programs from the DoD, probably 10% of the defense budget, something like that. And then I think they just piled everything on because, like, if you look at the chart itself, like nobody gave a crap about any of that until that whole FOMC thing came in. And then the media just started piling on more. So, like I said, everybody knows, I think, where these options are piled on, where the liquidity is. So if they realize it's a great time to short or pull down the market, they'll do that. And you have to remember, this is the third week of the month. Third week of the month is a options expiration. All right. So you have options expiration of the monthly calendar, right? For the index level. And so if you do the SPY and the QQQ max pain, so if you remember those lessons I gave about max pain, then you know this week the market makers want their money back. They don't want the call options to be winning right now because the call options are way too in the green. So we got to wipe out all those call options. So here, I'll show you. All right, let's look at the max pain for the QQQ. Okay, let's see. Where is that at? Let's see. Options chart. Does this thing work? Okay, here we are. So here's the price right now, 536 on QQQ, NASDAQ 100 ETF. This is the max pain, 525. So it has to go to 525 to benefit the market makers here. Okay, so getting it as close as possible to 525 is the goal for Friday, tomorrow. So it makes sense. They didn't want this thing to keep climbing up here, so it had to come back down eventually. SPY, much closer. So this thing is a lot closer now. 601 is the max pain for the SPY. So current price is 609. So I think you get it, right? You can kind of see what things are. And if the market makers control the news, they can make any news sound a lot worse than it can be, right? So you got like Jerome Powell, they could hype that up, and then they could just start piling on to any of the top companies that are part of the S&P 500, which is Palantir is part of, NASDAQ 100, Palantir is part of. So Palantir got added, like I think last quarter on the NASDAQ and 2 quarters ago on the S&P 500. So it's probably one of the largest components of the S&P 500 right now based on just market cap. Okay, so I think you understand. Always worry about those third weeks. And then the third week of the third month of every year, even worse. That's the quad witching, triple witching. Okay. All right, let's continue on. Let's see what Martin Shkreli is doing. I'll show you his boring little video here. Let's see, what does he want to short? What does he want to short?
Just on the holy shit! What the hell? SMCI burning down.
Order fill.
I told you. Yeah, yeah. Who said I told you? Who said I told you? Nah, son. I told you. I told you. You were telling me that you told me, but now I'm telling you that I told you. Talking about Shkreli, I told you to go long. Oh yeah? Shkreli, why you short SMCI? You a bum. Oh yeah? Holy shit. God damn. That's a gyat. That's like seeing a big old gyat. Yeah, damn. Harp tries to sell $1 billion of stock. That's well known already.
Look at him think. Look at him try to find the news. He's trying to find why it crashed. So who cares why it crashed? You should have known it was going to crash. You should have timed it. You don't need to care what news they were going to drop to make it crash.
No, I didn't cover much. I'm always trading a little bit here and there, but I didn't cover much QC. I kind of added to it. Yeah, damn, momentum stocks are dropping. You got to hit. If I'm sitting there and I'm really trying to make some money, you got to start hitting some BBAI. You got to start hitting some shorts here. Fucking Palantir dropped 8%. What else has gone up a lot? I would hit some App 11. Yeah, that's still up. You start shooting first, ask questions later. Let's go. Playing with you. What else is there? What else are you starting to hit? Come on, give me that App 11. You just got to short whatever now. I don't care what's going on, bro.
Order filled.
Okay. What else are we shorting? We just got to cut into some stuff. What's been up a ton? Tell me, guys. Come on. Do something useful for Scully. What's been up a ton? Hymns. Let's go after hymns. Let's go. Oh, yeah. And you know our quantum's going to pay too. Okay, what else?
Order
What else?
filled.
I'm in hymns. Now what else? DJT, fine. Fuck it. Short some of that. I'm always down to short DJT. And again, I love President Trump. What else? Carvana? Yeah, let's fucking do it. Even though they're reporting in 30 minutes. What else? CRISPR, Oclo, there you go. Short some Oclo. You got to hit all this momentum. If momentum is going to sell off as a factor, this is what we do. Now, it could be too late as well, but momentum selling off for a reason. RX, I like that. Okay. What SMCI? Is this thing gonna bottom? It's up $1 off the lows. Somebody's blowing up. It's a quant fund or a pod shop or something. Somebody's getting taken to the cleaners. Right now at Citadel, there's a guy screaming, "Get it off my books now!" When you really want to get this shit off the books, you just short a bunch of SPY. It's easier, faster. Short 2 billion SPY, you don't have to worry about anything else. Let that shit burn. The fuck is happening? Is this Trump? The fuck is happening? Is this Trump related?
He still hasn't figured it out. He still hasn't figured it out. Nah, bitch. It was Jerome Powell. Jerome Powell just did a drive-by and nobody was even paying attention because they thought it was meeting minutes. Oh, man. You see? You got to have a calendar. So all you guys, you should have a calendar, okay? You guys should know when important things happen. Just in case something happens. Usually nothing happens on the meeting minutes, but just at that moment, just a split second, the algorithms read that report and just started selling off like crazy.
You know, momentum contagion happens. I mean, look, we're barely down right now. We could be down. This is nothing. We could see 610 real quick in a heartbeat. Or 609 or 605. This ain't shit. Oh yeah, MSTR. Always a good idea. Yeah, if the market gets sick of momentum stocks, we definitely have a problem. It's kind of like IonQ has been flashing us last week or two. It's like it don't matter if it's good news or bad news, bro. I mean, think about this. You got think about this. You got Microsoft coming out and saying we're making a fucking quantum computer. Okay? Microsoft. And IonQ is barely up. Right? Hell is that? Tells you something. This market doesn't care. Okay, so it's all coming in defense cuts. But, that still stings the momentum stories. Because even though you're like, oh, well, quantum's safe, my nuclear plays are safe. Well,
Oh man, he's trying to rationalize everything now. Who cares about the news? Who cares about the news, guy? Just care what Jerome Powell says. That's all that matters. What Jerome Powell says. So, again, have a calendar up. Know when things are happening. So you see here, this is my time, this Pacific. Okay, let me set it to like Eastern here. You see here, 2 p.m. FOMC minutes. All right, that's last meeting's minutes, last month's meeting's minutes. Usually, nobody cares. Usually, it's a nothing burger. But I think Jerome Powell's kind of pissed that the stock market has been going up since his meeting. He's kind of pissed that the bond market has been recovering. I think he's really serious in saying, hey guys, I am going to try and stop you guys from pumping the market because what you're doing is making everyone's 401k go up. And when everyone's 401k goes up, people get happier. When people get happier that their accounts are growing, they're more willing to spend. So they don't care if eggs are $20. So if they can get their hands on $20 a dozen eggs, they'll pay for it because they'll be like, hey, whatever. My 401k has gone up another 5% in February. Jerome Powell doesn't like that. He understands that inflation is highly psychological. So again, come here, go over to the calendar. So don't be like Martin Shkreli, confused as to what happened in the last 2 hours of the market yesterday. All right, go to the calendar, and you can go to other people's calendars too, other countries. There's Japan and all that. And if you want, you just delete the United States here and just go the world calendar. So you can have the whole world's calendar. And usually nobody really cares except for stuff that Japan says and what America says, and sometimes what China says. Europe, maybe a little bit of what Europe says, but not much anymore these days. We don't really care too much of what Europe says. That's about it. That's all you got to care about. All right. Now you understand. So I don't know if there's anything else interesting in that video. So right now I'm going to play some Samantha LeDuc. It's going to be a very dry stuff here. Okay, that she's doing. Very dry. Actually, I'm going to play this first. I think this is a good time to play this because I was going to talk with John about John wanted me to talk about private equity. So I found this clip from this roundtable 1 month ago. So I was listening to this. So I'm going to play you a part of it. All right, here.
And is a great value trade, I think, for a lot of people. I personally just don't know enough about the individual companies driving it.
Okay, that's fair enough. Lastly, things we haven't really touched on. We kind of mentioned gold a little bit, but like this whole concept of alternative assets, what do they mean to you guys? How should people think through them? Are they just, things where we've washed volatility out of? How do you think about alternatives for a portfolio for this year? Or should we just ride the S&P 500 to the moon?
The alts, again, it's, I start to worry a little bit when Wall Street has these sort of niches that they share with the public. It's like all of a sudden, hey, you know what? You too can get what the big boys have been buying for a long time. Like, oh, why you want me in there now? You know,
I think the greatest revolution for private credit and private equity was taking it from the qualified purchaser, meaning the 5 million liquid net worth, to the accredited investor, which means you have to make 200,000 for the last 2 years.
yeah,
There's a big chasm there
big
of wealth,
yeah,
right?
yeah.
And so I think that is one of the very strong creations that has led to this private credit, private equity revolution, as people are.
And listen, fair. This is good. There's some building worries about that too, because it's a lot more opaque than than other investments, and so the more popular it becomes, the more money that funnels in there. You're talking some of the numbers you were talking earlier, and it's more opaque. We don't even really have necessarily great pulse. We don't really know what the hell is going on in there. We hear about the returns and the opportunity, but I don't know that everyone understands the risk, or so.
The great news is that the ones that, I buy a couple of funds here and there, usually vintages, just on stuff I would never buy. As Jeffrey says, it's much easier to buy something you don't.
I got a buddy at Morgan Stanley, and he does those for, and I'm like, my man, Ed, stop pitching me. Just go ahead.
Yeah, well, and on top of that, it's like, okay, well, I don't take enough risk, so let's just, do it. It's blind. I don't want to hear about it. But I got to say, I was amazed. In 22, my bonds were down a lot. My stocks were down a lot. But my private credit, my private equity, it was flat to up.
Yeah.
So I mean, it's a brilliant investment. With
Like a CD doesn't have a price change either.
That's right. You're just hoping it matures. But the problem is, you will have a markdown at some point. It just will be minus 100.
But now we've got private credit is now starting to roll out ETFs. So
How is
we've
that possible?
we've gone from the accredited, qualified investor to accredited investor to John Q. Public. So what's Apollo keeping and what's Apollo putting in the ETF that they're giving the John Q. Public is really, and what I think has happened largely with the alt space is this is an outgrowth of Dodd-Frank from 15 years ago, which is why we've seen the number of IPOs go down and everything else, that they've made it so disadvantaged to be a public company and so disadvantaged to raise public money that we're just bypassing that space and we're raising private money. And we're doing this in private kind of ways. And then it now takes on the point, which is what I was kind of implying with the private credit ETFs, that going public, whether it's an ETF or it's an IPO of a company, is like an exit strategy. In other words, you are my exit liquidity. And I am making this determination that this thing has now run its course. You can have it and good luck. I'm going to walk away from it right now. That wasn't the case before. That wasn't the case if you go back in the 80s and the 90s. When the Googles and when the the Microsofts and stuff came public, they were very early stage companies. And when Amazon came public, there was still 1,000x left for the public to make in those. Now the 1,000x is made privately, and then they give it to the public after that. That's the problem with the alt space right now, is to try and figure out what are they pitching me to be their exit liquidity on versus what are they pitching me that's in the earlier stages of that. And just to give you one kind of mindset idea, that was the popularity of SPACs for a minute. And what was a SPAC before they kind of blew up was, I want to get in before the IPO. I want to get in a little bit earlier so I can enjoy some of that 1,000x move before we hand it off to the public. And so the SPAC was an idea to try and get in early, but then they turned that into exit liquidity too. And then that wound up being
There's
bad.
still one that's pretty good, but I can't mention the initials because we'll get Rosie upset again. Rosie, what do you think about all this? I've been giving you a hard time over here. What are you feeling about markets today?
Well, I'll come back to what Charles said before, because it reminded me of Chuck Prince in July of 2007 when he famously said, you gotta keep dancing till the music stops. And who knew back then that the music was going to stop 3 months later? So I don't know. I'm not really a market timer. And, we always hear that valuation is not a timing tool. Fair enough. However, the one valuation metric that goes back 100 years that is a 10-year smooth multiple. So it covers the entire cycle. It's not just a 1 year forward, 1 year trailing is the CAPE, the cyclically adjusted price earnings multiple. And right now, as of in January, the S&P 500 CAPE, well, you know what that number is, right? It's 37. Okay. So when was the last 37? December of 2021, and 2022 was not actually a very benevolent year for a long-only equity manager. It was last year in 1999 and last year in 1929. So I hear that it's not a market timing tool, but it's either a headwind or a tailwind at any moment in time. But when you get to a 2.3 standard deviation event, now I want to make this point clear. Somebody mentioned before about the ratio of the US stock market cap to the rest of the world. There is no other stock market in the world that is a 2.3 SD event right now, except for the S&P 500. So that classifies actually as an official price bubble, not a mania. We've morphed from a bull market mania into a bubble. And, Charles, did say that we have these 7 great companies, and they're great companies with business models and with cash flows. And I get this all the time. Well, you can't compare this to the quotes .com bubble of the mid to late 1990s. And I don't disagree with that, but it wasn't about pets.com. It was a broad, we called it TMT back then. Do you remember? Technology, media, telecom. It was a broad technology bubble. And we had great companies with great business models and great free cash flow back then. And they're around today. We had Microsoft. We had Intel. We had Cisco. We had IBM. Okay, we had all these companies, and they're still great companies. And they were great companies back then. But the problem is that their stock price wasn't so great. And then we had a mean reversion trade, as per Bob Farrell's rule number 1. And then their stock was in the penalty box even after the lows for 10 years. And they're great companies, and they're still around today. So I am pretty nervous about the stock market. I know, I'm the boy who cried wolf. But remember that the wolf shows up at the end of the story. And then what is going to happen next? Here's what keeps me up at night from a societal standpoint, because we talk a lot about society. When you go to the Fed flow of funds data, you're going to see something we haven't seen before, which is that 70%, it's over 70% of the household financial asset mix is in equities. So not only now, basically roughly 10% is in bonds, and then the rest is in cash. This is doesn't include durable goods, doesn't include art, and doesn't include your real estate. It's the financial asset mix. This is a higher concentration of risk on household balance sheets than we had back in the late 1990s. It's unprecedented.
Uh-oh. All right, so I guess all your money is in the 401ks, aren't you? All right, whatever. But, I am a market timer. So the first part of that whole discussion, they were talking about private equity and how private equity was where people hid all their little IPOs, because you had Peter Thiel, all these guys, they made a lot of money, SpaceX, PayPal, all this stuff privately before it went into IPO. Now, very rarely you get a good IPO that you can make a lot of money on. Palantir is one of them. Yes. But still, people bought Palantir shares at way cheaper prices than I did. I got in at $7, $9. They probably got in at $1 or less, like Peter Thiel. And so that's what they're talking about. Essentially, most of the big gainers are getting harder and harder to find. All right. And then the second part, you heard like that dude was basically harping on valuations, very down to the point where, the stock shouldn't be this high. You can look at Palantir again. It's like, it shouldn't be worth this much, right? But yet it's 120. right? It hit that point before going down yesterday. So anyway, this is the hard part. How to time the markets correctly, and you got to do behavioral finance. Everything's with behavioral finance. All right, let's go back to the little stocks here before I end it with Samantha LeDuc of LeDuc Trading. And it's going to be a little bit hard to understand this last one, but because it deals with options, so I think a lot of you don't understand. I don't really understand either most of the time. So, but let me go through the last stocks as we go into the close today. So, Bitcoin about 98,500. Natural gas. So I've been saying short this, right? So I tried to short it on Friday, Thursday when KOLD. So let me show you KOLD. So I got in around like 25, around here, right? And then yesterday it just started moving up, 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 up. I got stopped out. All right. So it looks like natural gas wants to go higher. On news that March is going to be quite cold compared to the average. So the forecast right now is March is going to be pretty cold. So all you guys in the Northeast and the Midwest, enjoy. Supposedly you'll be getting nice cold Arctic blasts all the way into March. So natural gas prices start shooting up on this updated weather model. So it's up, 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 up. So yesterday I said, well, since we hit here, this is a spot natural gas, 4.5, so $4.50 a million British thermal units. I said, hey, well, we hit here again. Let me short it. Maybe I'll go back down to $3.60. So this is the range, around 450 to 350. All right, that's the range. So if you go up here, short. If you go down here, long. Back and forth, back and forth, back and forth. So let's see what happens. Maybe I'll get lucky. Maybe I'll get lucky and the weather models get updated again. And then they show, oh, it's not as bad as they feared. And everybody that bought up here will take it back down to 350 and maybe even lower. If it does that, it's time to buy natural gas for March. Okay. So this might go into March. And when we hit the bottom of March, I'll see if that's the time to go long on oil much more seriously. Right now, we're just doing little trades. But I'm looking to get more oil again, just like I tried to do last year. Okay. It was pretty tough. It's pretty tough to time natural gas. That's one of the hardest things to trade for a swing. Most people will not swing it unless they can effectively manage their risk using multiple futures contracts, short and long. So since we can't do that, I just have an ETF here that tracks it. So cold, KOLD, is for the short side. So if you want to short natural gas, you use KOLD. And when you want long, you use BOIL. Pretty easy to remember. Cold and boil. All right. So usually it's easy to know that when it's winter, it's time to buy cold because we already peaked in demand for natural gas. So winter is a good time to short. But it seems that we are getting quite an unusual winter because I think the last two winters were also unusual. They were quite mild. Europe also had mild winters, also hurting global natural gas prices. And then we have the effect of China. China also is having issues with manufacturing, right? Their economy is down. People's demands are not as quick as appetite as the ones there once were. And Trump and Biden overall have been moving manufacturing away from China. So that's also eating into it. So their demand for energy is lower, right, at this point. So if we have, and right now we have like low oil prices, crude oil, you have low crude oil, you have low coal prices, and therefore you have low natural gas prices. But right now, natural gas has been picking up despite coal and oil having weaker demand. So once that changes, expect natural gas to be going really high this summer. Let's see what happens this summer, though. It also depends on the weather. All right, so done with cold. Let me look at some other ones here. HIMS, I looked at. Axon, I kind of looked at. Tesla, okay. Let's look at Axon a bit. So Axon double top here from December here. So yeah, not looking good. I think, and Earnings is around the corner. So I think this long-term trade is about to be over. Let's see. That's Tuesday next week, 25th. Okay, Palantir. Let's see what else. Baba. Alibaba released earnings. BABA. Okay, not bad. So China still good trade, but I'm already out on my Xiaomi XIACY. Okay, I'm pretty much out of this one. So let me show the weekly here. So I'm pretty much out of this one. All right. BYDDY still looking good. It's up almost 5%. I don't know. I don't know if I want to hold this yet, but let's see what happens. It's not going to report earnings until later on, so I don't know. So going back to Baba, yeah, I think we're in this range here. So this rectangle, now we're above it. I think we're going to be stuck here. I think that's the final move for Baba. We're going to pull back. Watch where it pulls back. All right. Maybe it goes back to 120. Okay, that's about it. 10 cents. Yeah, 10 cents. We'll have to come back to this later. So 10 cents, Tropes was asking me about this. I said, like, yeah, I could go up to 100 from here, but not yet, maybe. Not yet. Let's wait a while. So be careful with the Chinese stocks right now. I think it's already done its move for the first quarter. Wait for the next quarter. All right, Carvana had earnings. Okay, so it's at the top again, huh? It hit its top here, 230-ish, November. So 340 is what's left. Yeah, Mark Scully could be right. Could be time to short Carvana. CVNA, I don't know. If you're into shorting, yeah, look at it. Maybe you can buy some puts. And then, let's see. Deere, DE. All right, tractors. Like I said, this is a good long-term chart here. So if you got in around 450-ish, yeah, it tried to go up a bit this week to 500, 508, 510. Okay, so now it's at 495. Yeah, it's still good. That's a long-term Deere, DE. TMC could also be a long-term one. I mentioned this before. It's a penny stock, though. It does underwater mining. So last 2 days, it's broke out of $2, went up to about 250. Yeah, 250. So I'm watching this. This could be the time when it finally leaves the $2 area and gets to 3 something, 4. And that's it. Then we can fly back up to 10. So yeah, watch this one. This could be a long-term. TMC, the metals company. All right, last one to look at. Oh, Mexico. Oh, yeah, I got gold too. Okay, there's some to look at. Mexico. Yesterday, it hit the resistance. You see that? We got a down sloping 40 moving average on the weekly. We have here 53 on EWW. So this is EWW. I'm using MEXX to trade it. MEXX is the 3x leverage of this. So it went from 9 to 12, 13. Okay. EWW, the equivalent move is around 47-ish to 55, 54. All right. So let's see what happens here. I don't know if this is the completion of this move and we have to come back down, or we can break out and continue onward. So watch Mexico, but maybe just like Chinese stocks, it's kind of moved in its own way for enough time. But again, I see dollar, the US dollar, DXY dollar index. It's been moving down. If it can break below 105, yeah, okay. Mexico and China can keep on going. All right, next one. Same thing with gold, actually, since we're talking about the dollar. So gold miners, GDX, back at 42. We're still here, so that's good. Let's see. So I'm going to use this one, GDX. Okay. Let's see how it goes next week, into next week. And we have AGI. So AGI, yeah. So it had earnings today. Good. It's trying to move up still. So let's see what happens. And the other ones that were mentioned was AEM. I mentioned that some other time ago too. AGI, AGM, AEM. Okay, AEM. Oh, it already had earnings. Oh, good. So that's done too. Okay, EXK is for silver. My silver miner, EXK. That's the one I'm using. KGC is another one. but it already had earnings and wasn't that good. So, but it's done at least. The earnings is done. So KGC is another one. PLG is for platinum. So PLG, okay, it's at 144 right now. See if it can get to $2. And if you want to do platinum palladium trust, you can use SPPP, 3 Ps. Okay. Let's see what else. And we have GDXU. Okay, GDXU is the 3x leverage of GDX. All right. So you can, if you want to trade it, you want to trade GDXU, you want to use the ETF to trade, then yeah, you can see if it can pop here, because we've gone all the way round trip from October, December, February. So round trip here. So are we going to continue up? Watch it. So GDXU, 3x leverage of GDX. Okay. So from here, 26, yeah, it's about 100% here from the December low. Okay. New Year's, from New Year's. All right. Good. And then AGI, the first video being played, Alamos Gold. So yeah, keep watching this one. It's broken out of 20. I think this area is important. Yeah, right. We're at all new highs now with AGI. All right. Yeah, pay attention. Pay attention. There's plenty of things to go. And also look at the stocks I mentioned last time and the week before. Everything should be on your list. You don't know what's going to happen, because like I wasn't talking about HIMS this week, but yesterday, you know, if you keep it on your watch list and you see like HIMS popping, it was up 22%. It's just like, oh, God damn. Yeah, got to pay attention. Anything could pop at any moment, up and down. So keep them all on your watch list. Look at them on pre-market into the open. See what happens, and you can day trade anything you want, short, long, whatever. As long as it moves, you know, that's all we got to care about. All right, now I can play the Samantha Leduc video. Okay, market's closed, 10 minutes now. We'll see what happens tomorrow. Hopefully nothing, but we have a long weekend. Oh, not long weekend. I mean, it's just 2 days again. Okay, never mind. We just have a 2-day weekend. Watch for that. Come back on Monday, okay? So if you're not going to trade tomorrow, come back on Monday. See you guys on Monday. And then we'll plan from there what we want to look at, okay? Because based on what Friday does, which stocks get hit, gets damaged, or gets pumped, then we'll have to decide what we're going to do next week. Because into NVIDIA. All right.
Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Hey, greetings and welcome to Macro to Micro Options Power Hour. And it's Wednesday, and I'm Samantha Leduc, founder of LeducTrading.com, joined by Hans Albrecht, our options mentor in our Leduc trading service for clients. We also welcome back. You are back from sunny Chicago. I mean, you said you were going there for vacation. Okay. And you made it back safely into Toronto. I'm East Coast, he's West Coast and North, and we're here to talk about markets, some sector rotation themes that we're going to get eventually. Macro trends, obviously, always, and individual stocks that we're waiting to move. We kind of have this market still in suspended disbelief, but from a volatility standpoint, there is some rumblings underneath the surface. I run that live trading room so I can see tons of volatility calls coming in of size for March, expecting maybe volatility from some of the headline risk. But I would say not just NVIDIA next week, potential for disappointment, but especially jobless claims coming in Thursday as we move into non-farm payrolls for the end of the month and beginning of March. Obviously, Doge has been shedding labor for the U.S. government in an effort to save some dollars there to cut deficit spending so we can get, or so I should say, so Trump can get a tax deal done and tax cuts pushed ahead, which right now are going to expire in this end of the year and August timeframe. So right now they're negotiating and reconciling debt ceiling, et cetera, et cetera, et cetera. So long story short, we have a lot of stagnation on the surface level. Underneath, there is definitely some volatility hedging coming in. So take it away, Hans. What are you seeing in this market backdrop that I haven't kind of hit over the head, which is basically we are in this market of disbelief. We're not really going anywhere fast.
Well, first of all, I made it to Chicago, and I don't know if you've seen our Canadian dollar, but it's because I was on my way to Florida, and I could only afford to go half as far. You see what I mean? You gotta stretch your Canadian dollar as far as it can go, and as far as it can go was Chicago, and it wasn't as sunny, but
And you made it back safely. That was the other thing. Okay.
It was a shorter flight. So, well, I think what we sort of had this underlying strength as we seem to continue to have every time we sell off. I'm seeing the VIX kind of hanging in there around 15 and change. And I think that in part is sort of a bit of a volatility echo from the recent sort of knee-jerk reactions down. So we had the tariffs, we had the CPI a little bit, we had a number of things, some Trumpisms that kind of got in the way of the market. And so there's sort of this sort of nervousness. Brad is nervous right now. And but having said that, we're at all-time highs, right? So it's hard to deny that stocks are full with this. Now, it's quite possible that this is the clenching ahead of next week's potential unclench. So when we look at some of the gamma levels, as we like to talk about, they have been quite high, extremely high, sort of right around where we are. So that's really leading to this sort of lower volatility because you've got dealers who are supportive of markets on the way down. We get a little sell-off. Like yesterday, we saw that, quick sell-off, 30, 40 points, and then boom, right back again. And then, but by the same token, we're not really getting too far to the upside to blast through to those melt-up style highs, possibly because of that gamma as well. So there's stock for sale and there's stock to buy below. That's kind of how the hedging mechanism works with all those positive gamma. A lot of that burns off this week. So we are potentially free to roam about the cabin again, which is, in a world, I mean, there should be more gamma, especially with, I think, volatility levels a little bit, on the high side, given that we are near those all-time highs. We've been making all-time highs. Yesterday we made one. And so we're kind of in this area where I think we could see a little bit more supply come in and replenish some of that gamma. But it's very much an environment where I think, and we often talk about this, there's this sort of, volatility clustering where either things are going wrong or they're very, very quickly back under control again. And I just think it's, some of these things that we always talk about, which is a little bit of accelerant under the surface. So we're seeing these dealers very, very short VIX upside calls. And so these things that we kind of ramble on about aren't necessarily things that cause problem. But when you do get some sort of reason to sell off, that's when the accelerant can start to kick in. But having said that, we've had a couple reasons to dip below 6,000 in the last few weeks, and well, here we are. So we're right back up again. So I'm not sure what that trigger is going to be. You're going to be in a better position to kind of postulate what that might be.
I have some ideas, but I was showing that gamma level while you were talking about it, because Gamma Lab actually put up that was their chart and had a really good kind of explanation. Current gamma distribution for the SPX is below, which I just showed you. Dealers are selling many of the futures between 6150 and 6200. This is strong resistance until it isn't. So as usual, and emphasis mine because I highlighted, but once the market breaks into that zone, liquidity will increase substantially, which is the positive gamma, and dealers increasingly buy the dips to delta hedge their option exposure. So this is a little bit of what it feels like right now. And yet I still have divergences that I keep talking about on kind of a bigger time frame, which is the macro backdrop is still, we talked about this, unsure about all the headline risk and the cost cutting, because it is definitely an economic slowdown trigger and jobless claims trigger. And I think that we're going to start to see that come into the market, maybe a little bit tomorrow, but definitely next Thursday and the following Thursday. So long story short, we have got some levels that I keep seeing in my intermarket that are big divergences, and then you've got your VIX skew and related tools. So we'll kind of look at that right now. But go ahead, you were just kind of, I wanted to explain what I was showing while you were talking, which is that positive gamma,
sure.
if we can get and stay above that 6150, 6200. Otherwise, they're still selling into that.
Yeah, so that's really the fun, the much more fun way to do things, right? When dealers are positive gamma, you're able to be more reactive to market. So you're able to buy stock on the way down against either stock that you're short against calls or against puts that you're long. So you're in a position to be kind of reactive to markets, as opposed to when you're short gamma, you're kind of having to chase things around. So when the snowball starts down the hill, you kind of have to run after it, and not to mention all these sort of synthetic gamma products like the very, very large ETF exposure. So if I look at, so we have these very large levered ETF AUM numbers that is another form of, you see these, they sort of do these calculations. Well, if, you know, on a 1% move, on an X% move in the S&P, these products have to rebalance, right? So the levered ones, the inverse ones, they have to actually sell into sell-offs, and they have to buy into rallies. So the gamma doesn't just work negatively, it can work to the upside as well. So, you know, it can work both ways. Right now, we have a lot of those kinds of accelerants underneath the surface, just kind of waiting for something to kind of ignite kindling. And it really isn't happening. And they've tried a few times. So it's quite amazing, the resilience. Some numbers have come out saying hedge funds are sort of sitting in really, really very high cash positions, which is obviously going to be bullish in general, because they may have to chase. They may have to sort of get that, you know, the fear of missing out. They sort of will chase to the upside. We're not really seeing that in the skew right now. So if I look at some of the skew, I would say that's kind of a positive from the standpoint of, see if I have some of these skew numbers here. I'd say that's a bit of a positive because we're not seeing extreme skew. So when you see extreme skew, that generally means that dealers are probably short that, right? So that's going to add to the accelerant. So we could, from a bullish perspective, I would want, if I were worried about a sell-off, I'd want to see this a little bit more extreme to the upside, which means that you're now saddling dealers with that short gamma, and that's going to perhaps precipitate, or not precipitate, but accelerate a sell-off. So there's sort of a little bit of bad going on here. We can see, as usual, in the VIX complex, maybe this is part of the VIX kind of staying up around 15 and a half, is that we do have this big imbalance. So a lot of gamma imbalance in the actual VIX complex and calls, right? So we know that we buy calls on the VIX when we want protection. So it's the kind of opposite of the S&P where you buy puts. And so dealers have very short positioning in VIX calls. So 11th percentile, so quite short. So that's the potential accelerant in there. Now we've seen VIX behave much more than a few months ago when we talked about that beta to the S&P selling off. So the VIX isn't being as reactive, and we saw that, interestingly enough. The one curious day was when we had that, I think it was the CPI number, and we had that quick sell-off down to maybe 5,900, 5,950. I did not see any fear in the VIX complex. It was a little bit of VIX popping up, but futures really sort of still in that very happy contango shape, which is the futures kind of rising up into the distance over different expiries. So there's been a little bit of a mixed bag of information out there. And so I think the market is basically sort of taking it as glass half full. You know, okay, the tariffs have been a little neither here nor there. Maybe it gets worse in some ways. I think does have some durability to it, but as we've seen with the art of the deal, it's kind of, you know, come out barking and then kind of dial it back a little bit. So I think the market is starting to kind of react less and less to little negative things, because they're going, oh, that's just the way it's going to be. We're going to get used to the way things work with President Trump, and it's going to be a little bit of showmanship, and it's going to be a little bit of, you know, saber rattling, and then we're going to make a deal. And so I think that's the hope. And then ultimately we get regulatory benefits, we get some tax cuts, we have an economy that's generally strong, which I think could maybe soften a little. But porridge is warm, Samantha. So what's gonna kind of spoil the party at this point? And you started to talk about it there.
Yeah, we'll talk about that, the macro stuff. But for right now, I definitely want to ask you on this, which is, all right, so right now, cash levels right now are really at 15-year lows. So it's definitely an impressive big picture. They're all in. So we still have a lot of concentration risk in investment in the equity market. But aside from that, given the fact that we're all-time highs, right? We just talked about the dealer gamma. Really, they're selling, you know, against that 6,200, 6,150 in futures. We really need to get above that to have that kind of right tail chase higher. But for right now, talk a little bit about these two charts. First of all, this is skew, and because we always talk volatility on an options power hour, this is really a focused look at how skew has been pushing higher and higher, a little bit of a tell on kind of big premium for downside protection. So puts aren't as cheap, relatively speaking. You can comment on that. And then the other side, the flip side of that, is where we've got put call ratio at a very, very strong low. And we're talking relative to, oh goodness, not even since 2021. So this chart doesn't go back far enough. Point is, so we have not a lot of folks hedging. So, okay, riddle me, square this circle, whatever you want to call it. Comment on these two charts in particular.
I think the way the circle is squared a little bit is that we have such massive flows into zero DTE that they've really become kind of, they're now the dog, right? So we talk about the dog and the tail and all this kind of, where's the influence really coming from? You can see that there's a massive influence. And that's taking flow out of the monthlies and the weekly flows to some extent as people kind of position in the near term. They're using the sort of near term protection. So, that looks like 1 day skew. Longer term skew measures, if we just sort of looked at some measures of that, not as bad. So it's kind of, I think it's somewhat concerning because people are very, what's the word? They've got tunnel vision, complacent, myopic. I don't know what it is. You're sort of like kind of stuck in this small world of zero DTE, and you're really sort of thinking about things from a daily standpoint, but that, and maybe disregarding some of the broader needs to hedge positions. And so they're kind of eschewing the longer term hedges for some of the shorter term ones. I'm kind of impressed in a way that people have sort of, really kind of pivoted to those short term measures, and that they want to put in all this work and do this kind of on a daily basis.
It's exhausting.
But I think,
not my cup of tea.
no, that doesn't sound like a whole lot of fun. Now, for the most part, from a retail perspective, they're really big sellers in the zero DTE, which is positive in a sense because it piles positive gamma onto dealers. So that acts as a kind of a support, a kind of a clenching mechanism from a dealer's perspective. That's why markets maybe aren't getting too crazy during the day. But it does seem like we're getting to this new disregard. Remember, we sort of experienced that in the first 6 months of 2024. Really, people had left puts for dead. They sort of said, we're never going to need another put again. Mm-hmm. And it's amazing. Emotion, I've been doing this for almost 3 decades, and some things just repeat over and over and over again, fear and greed and everything in between. So maybe it kind of presents itself in different ways, but people didn't need protection anymore. And then we saw August 5th and September, et cetera, where everybody kind of had this sort of moment where they kind of rediscovered the need for protection. So maybe we're heading to that again, but maybe it's going to require sort of 3 or 4 more months of a complete disregard for protection. And then we'll see if there's kind of a come to Jesus moment at some point.
So I have already kind of shared with clients my thinking on this because I was.
All right. That's a good setup for tomorrow. Okay. I think you got a good overview there. I wish they blew up their slides, zoom into their slides when they put them up, because it's like, even if I put this to like a 1080p stream, like it's still pretty hard to see. So if you want, you can go to, it's in the description. Everything I put on the videos is in the description. So go here and go to the actual source, and you can push it up to like 1.4, maybe it's even at 2K resolution, and then you can zoom in with your computer and see those slides. Take a screenshot of everything if you need it, because it's a lot of information there packed in those slides, and they just gloss over it. They just gloss over it and talk as if you understand what they're saying. And I think at the bare minimum, what you should have understood was the put to call ratio. I highlighted it last time, if you remember. So I'll go over it again here. So put to call ratio. And then I'll get to it. Share that screen. Let's see, where is it? All right, here it is. Here it is. All right, let me present that. You guys can see it. So at the last bit there, she was talking about put to call ratio and was asking him about it. Okay. So, and if you remember, I said, like, okay, there's a put to call ratio, which means, and this is an equity put to call ratio I'm showing you here. There's a index version too, but I'm using the equity one. So the total, so every day they tabulate how many puts and calls were done over the trading day for the whole equity market. I think both NASDAQ and NYSE is in here. So, and if the ratio is high, that means a lot of people are bearish. They bought a lot of puts. That's what it means. If it's low, that means they bought a lot of calls. Okay, that's what the ratio is, puts over calls. So usually when it gets above 80.8 here, this is the 50-day moving average. That's a good time to buy, you know. So you get up there, you get, oh, that's a good. So it's only done that twice, you know, over since the GFC. So of course it probably done more before that, but I'm just looking at the 2008 area, 2007 up till now. So it did that once here, or twice actually, which is weird. But this one was just before the crash, I think, the final crash. So there was like a dip, probably a major dip before the final crash. But anyway, the last one was during that final dip here, right? So this was around, yeah, 08, late 08. So second half of 08. And then we go to this part here where it was like during which is interesting, right? This was during the late 2022, early 2023 area. So this was like New Year's during that turn, which is when, you know, you bought Palantir or any other stock like that. So perfect timing. Now this one is just a 5-day, so it's a lot noisier. You can see this thing is just a very noisy ratio overall. So I just show you the 5-day averaged one. But so far, like, we've been pretty low. So close to 0.5. I think it went just below 0.5 on the 5-day. Now I do the 253-day average of this. And now we're dropping to 0.6, pretty close to 0.6 now, 0.603. So yeah, we're getting very happy here. So when this number gets very low like this, and it only got very extreme during the COVID time. So everybody was buying calls, right? Into June and July of 2020, all the way into 2021s, and that was just before the collapse of the market. So you can tell we're entering that moment. And we could go a little bit further. So Hans was essentially saying, hey, you know, we could have 3 more months of this before it goes back. Yeah, possible. Yeah, this ratio here for the 253 average could go lower. And that would mean that this thing is entering a little kind of mini 2020 and 2021 moment where people are just gambling on calls because the liquidity is there. I mean, Jerome Powell is not liking this. So he can speak again, okay, next month. So he won't speak again until, like, let's see, March, what? Got about 26 days. We got 26 more days, okay? So probably close to the Ides of March, huh? Yeah, March 19th. So just after the Ides of March. All right, so watch that. I think that's what you gotta watch. And then we'll move on from there. But for now, we're doing good. Keep day trading, guys. I think we're okay. I'll play some more of this next time. I'll probably try to zoom up to a 1080p stream and play that because I think, yeah, if you guys want to just listen in, I'll try to see if I want to comment any more on it because, yeah, I'm not going to talk about the gamma levels and this clenching. Sounds like I'm going to the toilet and taking a massive poop or something. I don't know what that means, but yeah, I try to explain some of the option stuff like several weeks ago, right? Probably a month ago by now, in 2 streams. And maybe I'll have to do it again. Ides of March is your birthday, yeah? There you go. Watch out for it, man. That's probably the last high. If NVIDIA doesn't kill us next week, that'll be the last high. But for now, keep on what I've said. keep on doing what I said. Essentially, day trade only until I see this gamma unclenching that Samantha keeps talking about. Do I have to see the crowning of the head? What the heck is going on? I don't know. So it all has to do with the options. So she said the levels. I think it was like she said 6150, something like that, right? 6150 for the net, S&P 500. If it crosses that barrier, then everything's going to start shooting up. All right. So that's what we got to watch next week. Nvidia is in the way right now, and we have monthly options expiring tomorrow for the February options. All right. I think that's it. Oh, wait a minute. Maybe I should talk about something else. Hold on. I think 2 more stocks I want to talk about. Tesla and 3 more, actually. Fannie Mae, Freddie Mac again, because I mentioned them before, but I'm going to mention them again. Oh, and I might as well toss in the MSTR stuff. So tomorrow or Monday, I might go long more aggressively. I've been kind of going a little bit. I just need more proof from Bitcoin. Bitcoin's not really giving me enough proof. Okay. And then once we got that, then I can be more confident in the Bitcoin MSTR trade. And I use MSTX leverage. So Fannie Mae, Freddie Mac. So Freddie Mac, FMCC, $6.50, FNMA, $7.43. So it already had earnings, right? And so now I'm looking to see if this thing is going to continue up. It seems to be doing quite all right. But we're just doing up and downs this week. I want to see what's going to go on next week. If this is ready to move on to the next stage here, or I'm just going to have to wait for March. I mean, May. Yeah, March or May. I don't know. May or March, depending. Because, yeah, broken out. If you look at this monthly chart here, you see that? Yeah. I'm going to have to see this. Keep them in your watch list. Okay, TSLA, my bad. Tesla. So, looks like I drew something here. Oh, yeah, this is what I drew. I said it's going to go up to 400 and then go back down to 283, maybe. Okay, yeah, keep watching this one. I don't know, it's going to zigzag here and then break out and then get above 500 something. So, yeah, Tesla, watch this. So if you guys did not play this for election, this is your second chance, right? So my thinking is it's going to go up and then crash down to 283, and then you can use leverage TSLR, or you can short it too with the leverage if you want to short the 400 to 283. I don't know if it's going to be a serious crash or not when it comes around. So I'm going to keep watching it. So TSLA. Man, yeah, so because it's bounced right where I thought it would at 340. Oh, yeah, I don't know. I don't know what it wants to do now. It could try to get towards 400, though. That's my guess. Yeah, so I'll keep paying attention to this one. Could be a good trade for sure when it hits 286, if it hits 286. Okay, so those are the levels to watch. And then what else? Oh, what else? One last one. Oh, yeah, MSTR I'm going to talk about a little bit. That wasn't on my list to pay attention to, but if you look here, yeah, I mean, it's got to make it. It's got to make it. Either decide to crash now or forever hold your peace. Because if I look at the Bitcoin, it's trying. It's still trying. It doesn't want to roll over. So, shoot. Doesn't make it easy, is it? Yeah, it looks like it still wants to get back up. So it's going to go back up to 108 or what? Yeah, I don't know. Next week will be monthly expirations for Ethereum and Bitcoin. But it did what I was gonna think it was gonna do. I was hoping it would do a lot better, like go down further, like 89, and then tap up and shoot back up again. But fine. I mean, it just went down to 93 and went back up. So hey, if we get more volume and a better push here, and Michael Saylor's talking in Miami right now, I don't know if Trump is going to say something along the lines later, or his new CFTC or SEC appointments get through and start talking. If they chatter, then yeah, that could be the pump you need into March. But don't expect anything too much. All right. There will be no new highs until May. So there could still be a dip coming in March and April. So don't expect it to just go sideways. That's what I think it can possibly do, but don't rely on it. All right. All right, guys. I'll see you tomorrow. Tomorrow's about 2 hours, so 50 minutes until 2 hours. And remember to like and subscribe. $PORSHAJAYE for Cash App. PORSHA at jghb.info. And you can email me at crack, CRACK at jghb.info. Okay. And you can also donate Streamlabs, streamlabs.com/theurbanlandlord. All right. And yeah, we'll see you. Hopefully I'll try to figure out some more stuff to do for later on into March. I'm going to have to figure out which clips to get still. I got to go through a lot of clips again. And then once we get them, I can go do more tutorials. But for now, you can kind of see I'm quickly going over a lot of tickers, showing you what I see. And hopefully that gets you a feel, okay? Get you a feel for how I look at things. And then later on, we get more into details, I think, yeah. Because I'm a very sloppy trader anyway. So I never went into such details until I started doing this, where I just show you exactly what I'm thinking. So I think that'll be good. And once I get my Substack up to do consistent articles, then we can go over them one by one. And I have enough clips over the past 2 months, so I can go back and show you, hey, this is what I said at this date, at this time, and then go over like what did the stock do a week later, and then show you, or the day later, and say like, was I right? Was I wrong? How many times was I right? How many times was I wrong? Or what did I say? Right? There you go. That's all you need to do. Oh, you have to do this yourself too. Every time you make a trade, after you're done, go back and say, hey, how did I do in my trade? Doesn't matter if you made money or lost money. It just doesn't. What you want to do is like critique it. You got to critique every trade you make. All right. That's in the book. That's in that book, Trading in the Zone. All right, guys. I'll see you.
Feel like I should feel like I should feel like I should feel like I should go. Go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should go.